Welcome back to my channel, Miss Personal Finance, where we discuss everything about finances. I have different series on my page, including an animated series for teens and young adults, but I'm excited because this will be the first video in my home ownership series. For our family, the goal is to gain financial independence and build generational wealth for our children. For us, we plan on achieving these goals through investing in the stock market and in real estate. Post-pandemic has been one of the hardest times to purchase a home in U.S. history. The combination of increased interest rates on mortgages, low housing inventory, and increased home prices has adversely impacted the housing market. So how do you buy a house in 2024? In this series, we'll discuss the basics of the home buying process, go over some pertinent tips, and answer any questions you may have about the process. I've been in the real estate industry for over a decade. I'm a licensed realtor, and my husband and I have invested in a few homes, some of which we currently have as income producing rental units. And to answer the question, how do you buy a house in 2024? The answer is the same way you would buy a house in previous years, just with a few obstacles to be aware of. So we're going to start with the basics. Today's topic is going to be on preparation. Before you dive into the homeownership process, there are so many things to be aware of and so many things to plan ahead for. You can't just wake up one morning and walk into the bank to finance a home, unless you already have all these things in place. So we're going to start with the foundation. I know this is a budgeting channel, but a budget truly is the starting point and the foundation. Whether you have the cash to purchase a property outright, or if you're planning on financing your home purchase with a mortgage. Either way, you need a budget. So when you're going through your budget, you want to make sure that you are accounting for the basics. So that's housing, what you currently pay for rent, or current mortgage if you're currently in a home and just want to purchase another one. Utilities, anything that it costs to keep the home running, to run your home. So lights, internet, all of that. Then you want to look into your variable expenses, things that you and your family and your household need to survive, like household items, food, your groceries, gas to get to and from work. And then you have debt. Hopefully you don't, but nowadays it's very hard to find people that are completely debt-free. So shout out to the budget community for those who have reached that milestone last year and all the years prior. So for those of us who do still have debt, and that's another thing that you have to factor in, whether that is student loan debt, credit card, car loan debt, all of that is going to be factored into your application when you file or when you go to apply for a mortgage. So you want to be mindful of all of these things. And essentially when you're applying for a mortgage and the housing portion, whatever you're paying in rent, most likely it may be either the same, a little bit higher, but what they're going to do is kind of replace what you're currently paying in housing with the new amount of the mortgage and see how that impacts or affects your profile. Do you have now less money to actually afford the bare necessities? Are you under budget, over budget? So you just want to make sure that you're able and have the capacity to take on whatever that new mortgage amount is. We'll go more into detail in further videos, but we're going to talk about the breakdown of the mortgage and what you're actually paying on a monthly basis. But just to be clear, the foundation is your budget. Next, I want to talk about the main three things that you're looking at when you are looking to finance a home. We're just going to start on this notepad. I guess this will be our home buying notepad. I'm going to start with C. C, this is for your credit profile. There are different loan types, and each have their minimum requirements for a credit score. Some can go as low as 580 and even lower with a larger down payment. The next thing we have to focus on is, let's do S for steady income. So that's a paycheck or business income that's coming in on a regular basis. That's going to help qualify you for the loan or the mortgage. Lastly, we have M. And this is for money in the bank. This is going to be the assets you need for closing costs, to show that you have maybe some reserves in the event of unemployment. Just knowing that you have the ability to take on that mortgage even in adverse conditions. So we have CSM, credit profile, steady income, and money in the bank. So along with your budget and getting all of these things in order, you can definitely be on your way to own a home in 2024. So in this series, I will delve deeper into each one of these topics, and I hope you stick along for the journey. I'm excited to go into each portion in depth, and if you have any questions, you can leave them down in the comments, but look out for the videos that will be going over each of the CSM. And I know this is brief, but this is just an introduction. So that's all for this video. If you'd like to follow along and go through the homeownership series with us, don't forget to subscribe, like, and comment. And remember, whatever you put your focus toward, you'll see progress. So thanks for watching, and until next time, bye.